Well, it's been quite an eventful year with long-duration assets in the equity market, at least, rewarded handsomely during the first half of the year, really through July. And then there's higher for longer, interest rates, inflation, fears, rearing their ugly heads again. But I think we may be turning the corner. And so we're pretty excited about that. And as we always say, innovation solves problems. Innovation will transform the world and make it a better place. And, it's been such an interesting journey during this interest rate increase, all the fear, investors running back to their benchmarks, selling innovation, selling long-duration assets, not believing that cures actually were upon us. Even though Victoria Gray had gone through this trial, I think she's nearly at the end of her third year, and we had been watching it. No safety issues, cured. That just wasn't a concept before now for sickle cell disease and beta thalassemia. So, as Victoria said, great hope. And we believe that this moment is much like the moment we experienced when the biotech movement started with Genentech. And that created one of the greatest investment opportunities in the life sciences / healthcare space of our lives. And this, we believe, is bigger.
Cathie Wood just made a bold bet. In a recent showdown on Bloomberg's Merryn Talks Money podcast, Wood faced a decision that make most folks sweat bullets. Choose between gold, cold hard cash, or Bitcoin for a 10-year investment. But guess what she hollered out? Bitcoin, hands down. Now that ain't just some random hunch. Wood's been a Bitcoin cheerleader for a good while. She believes Bitcoin ain't just a shield against inflation. It's also about its guns aimed at deflation. See, Wood's team at Ark Invest believes Uncle Sam's heading for deflation, not inflation. It's like we're back in the 19-teens, not the 70s disco era. Why is she so bullish on Bitcoin? Well, for one, it's transparent as a prairie stream and doesn't have the what's going on in there vibe like regional banks. Plus, young guns out there are more into Bitcoin than the shiny stuff, gold. Oh, and let's not forget, back in September 2021, Wood predicted Bitcoin could hit a whopping $500,000 in just 5 years. That's like a Bitcoin stampede, y'all. But Wood ain't just about Bitcoin. She's making moves in the coral. Ark Invest just dropped $5.6 million on Block Incorporated shares, led by Twitter co-founder Jack Dorsey. It's like riding the crypto wave. And while Wood's rolling the dice on Block, she's cashing out on Grayscale Bitcoin Trust shares. It's all part of her strategy to bet on the future and grab the bull by the horns. So there you have it, partners. Cathie Wood's wrangling up Bitcoin, calling it the future, and making big moves in the crypto frontier. Let's continue our discussion with Cathie Wood.
We are not as negative about the deficit, although we do believe that the spending programs that have been put in place in the last couple of years after the initial COVID spending have been overdone. And as I've mentioned in prior in the nose, government spending is taxation of one form or another. It will turn into taxation, whether actual taxes to try and cure it, or in the case of a rapidly growing economy, the taxes that go with that would be a good solution, or inflation. And many people look at what's going on now and say, this is a recipe for inflation. The way to get out of debt is to inflate it away. We don't think that's going to be the case. And we'll get into a few indicators in a moment that support our view that actually the risk is not inflation moving forward. It is deflation. Chairman Powell this week during his comments after the board meeting, I think he had an inkling that the employment reports this week were going to be weak. I think he probably had a sense of initial claims. They went up. But also perhaps an early read on the employment report, which today was very weak. And one of the reasons it is so weak is this chart. So this is money growth, M2 growth on a year-over-year basis, going back into the 60s, early 60s. And you can see we've never seen a decline in money like this in this period of time. You have to go back to the 1930s, which of course was the Great Depression, to see a decline in money like this. Now, this is the other side of what happened during COVID, so it's it's understandable to some extent. But now we're soon going to be lapping one full year of negative money, and so the course correction has taken place, we believe. If money doesn't pick up, then what we will conclude is it's becoming a serious drag on the economy, and deposits are leaving the system. The regional banks still are losing deposits. That's part of the decline in money, and that's not a good thing. In fact, the KRE Regional Bank Index is revisiting its March lows when we were in a crisis around the regional banks. So the regional bank index is a warning that Fed policy has just overdone it here. We hope it doesn't break down the index, and there is it is possible that some of the numbers coming out now are making the case for a Fed pivot to so clear that the regional banks will not face as stiff a competition from money market funds and will be able to attract deposits again. So this is M2, still declining year over year. And here is the yield curve. Now, we've talked about the yield curve here many times. Here's the picture going back into the 70s. This is the 10-year Treasury yield minus the 2-year Treasury yield. And when it's below zero, it means that short-term interest rates are higher than long-term interest rates, which is not normal, as you can see from this chart. And you can also see that typically when the yield curve inverts, we are either in a recession or not far from a recession. And we would say we've been in a rolling recession for the past year and a half. The yield curve inverted for the first time in July of 2022. So it has been more than a year. And we think that it is a harbinger of much slower economic growth and lower inflation than most people believe. The other point we like to make about this chart is, to see a yield curve going down to -1 or -1% or 100 basis points, just like it did in the early 80s today, is quite something because the base of rates is so much lower. So today we have the long bond yield in the 4.5% to 5% range. Back in the 80s, that number was 15%. And yet we have had the same degree of inversion here. That tells us that monetary policy today is much more stringent than it was even in the early 80s when interest rates were at 15%, because 100 basis points on 4.5% to 5% is a lot more dramatic than 100 basis points or 1% on 15% interest rates. So we think monetary policy is much tighter than many understand. And we do believe it will have far-reaching ramifications over the next year or so.
A public Bitcoin mining company announced it has been cleared to issue a stalking horse bid for several natural gas power plants and a Bitcoin mining site. The Canada-based miner hopes to integrate these services to expand its business to sell power to the market and develop artificial intelligence activities. After a quiet period post-September 15, Bitcoin transaction backlogs are surging anew, with a noticeable resurgence of ordinal inscriptions starting October 24. The number of pending Bitcoin transactions in the mempool has surpassed 157,000, prompting a rise in high-priority transaction fees to $3.38. Rebel Satoshi positions itself as a bull market meme coin. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.